Hello, Steve Spangenberg from the Home Based Business Tax Coach, here to talk to you today about the 1099 trap of direct sales companies. When you get a 1099 NEC, there could be a box checked on that you have to do something special on your tax return. If you don't, you'll be in a world of hurt with the IRS. So, before we start, just want to tell you that I've been doing home-based business tax returns for over 47 years now. I do clients that range everywhere from Amway to Zango and everywhere in between. Save people $2,000 to $5,000 a year every year on their taxes, and I help you avoid traps like the one I'm going to speak to you about today. So that was all in one sentence. That was wild. So here we are. We're going to talk about the 1099 NEC. Now, this is for companies that you are selling product for. Companies such as Mary Kay, Young Living, Longevity, those type, Tastefully Simple, those type of businesses that not only can you make money from recruiting people into your downlines or into your groups, you can also buy product and resell at retail prices to customers. So when you get the NEC, and I'm going to be popping this up on the screen, when you get your 1099 NEC, there could be a box checked on that 1099. Now I'm going to have to refer to my box. On the 1099 NEC that you see in front of you, I've circled number 2. Payer, that's the person like Mary Kay or Tastefully Simple, has made direct sales totaling more than 5,000 or more consumer products to the recipient for resale. Now, what does that mean? That means that somewhere in the course of the year, you purchase more than $5,000 retail of products. So take, for example, Mary Kay is usually a 50% wholesale to retail. So all you have to do is purchase over $2,500 worth of product from Mary Kay, and they'll give you a 1099 NEC with that box checked. Now, that doesn't mean that you sold all that. That doesn't mean that you got commissions from the company, override commissions. If you got 0 override commissions and you also got more than the over the 5,000 in retail, you'll still get a 1099 NEC with that box checked. Now you might say, wow, what does this mean for me, Steve? That means, number one, if you ignore that 1099, if you ignore that box, and let's say you only had sales of $1,000, you would put $1,000 on your Schedule C, which we're going to bring that Schedule C up here. You would put $1,000 on line number 1, which is your gross receipts. Okay. Now, the problem is when the IRS gets that, it gets your tax return and matches it automatically to that 1099 NEC, it's going to look for a number for more than 5,000 on that line number 1, because they're saying, Mary Kay or Longevity. Let's just go with Mary Kay. So Mary Kay is saying, hey, we gave you more than $5,000 of retail goods in that year, and the IRS is looking and saying, well, your gross sales should be over $5,000. And what happens is it gets you a desk audit usually, which means they send you a notice and they want to know all this stuff. So it starts a process that you really don't want to start, because then you have to unravel it and you have to go to a person that knows how to unravel it. And I'm telling you, a lot of tax preparers don't know how to unravel those things. So if you get that, what you need to do is this. You want to show over $5,000 on that line number 1. Well, how do you do that? Because uh, you know, I only made $1,000 in sales, Steve. Okay, so what you do is on your Schedule C, you want to. And I'm going to pull this up here, and you'll see it on the screen. On your Schedule C, line 1, if you only made $1,000 in sales, I'd add $4,001 or $4,025 to that thousand, make it $5,025. Now you might say, Steve, I'm not going to pay tax on that additional $4,025. Well, I don't want you to. So what you do is you take it out here on line 4, cost of goods sold. And that's a calculation on the second page of the Schedule C. And you include that in your purchases. So on the second page of Schedule C, you want to include that in your purchases. Add to your purchases another $4,025. So you added it in line 1, subtracted it in line 4. It's a zero effect down here on line 7, but you satisfied the IRS up here on line 1. So that's the whole idea of that. And I don't know why the IRS requires them to check that box. It's a little, don't ask me why, because I can't read the IRS's mind. So I would carefully inspect your 1099 NECs to make sure that that box is not checked. And if the box is checked, then do what I told you to do, or consult your current tax advisor and ask them. But over 47 years plus, I know exactly how to get around that, and it's legal, and you're not cheating anybody. So I must give you the disclaimer. I'll give you the disclaimer at the end that everybody's tax situation is different. Consult your tax preparer. And this is not considered legal advice. This is considered my opinion over 47 years of practice. And also, if you want to get involved in a community that you can find out all the tax advantages available to you as a home-based business owner, you can go to www.createmyeconomy.com and invest $7 a month in your tax education so that you too can save $2,000 to $5,000 a month. I just did a lady's tax return that her accountant decided that it wasn't worth it putting on her taxes for the last 3 years. And she did have a substantial amount in sales. So it belonged on her tax return, and now she's getting over $6,000 back from those amended returns. So find the real story at www.createmyeconomy.com. If you got useful information from this video, like and subscribe to the channel. It helps me out. If you didn't get anything, move on to the next video. Make it a great day.